Investing for beginners, how I made millions, financial freedom, growing your savings, turning small amounts into millions. It might sound like a far-off dream, but the truth is, it's very possible. In this video, I'll walk you through the exact steps I took to build my wealth through investing, even when I started with very little money. But before we get into it, make sure to like this video and subscribe to our channel for more practical money tips and wealth building advice. Start small and stay consistent. Can you start investing with just a few dollars? Yes, and that's exactly what I did. When I first began, I didn't have thousands to invest. I started small, with what I could afford, and focused on consistency over time. Instead of trying to time the market or wait for a huge opportunity, I put small amounts of money into low-cost index funds that followed the stock market. This allowed me to invest in a variety of companies without needing to know everything about each one. More importantly, I didn't feel overwhelmed or pressured. My small investments slowly grew, and that steady growth laid the foundation for my wealth. Educate yourself first. Want to know the best investment I ever made? It wasn't in stocks or real estate, it was in my own knowledge. Before I invested a single dollar, I committed to learning everything I could. I read books, watched videos, listened to podcasts, and followed financial experts. One of the best pieces of advice I ever got came from Warren Buffett. Invest in what you understand. That changed how I approached investing. I didn't chase trends or follow hype. I looked for companies, industries, and assets that made sense to me, things I understood and believed in. Learning about market cycles, how different assets behave, and what affects their prices helped me avoid costly mistakes. The more you understand investing, the better you'll be at making decisions that grow your money. Diversify to protect your money. What's the biggest mistake new investors make? Putting all their money in one place. I made sure not to fall into that trap. Early on, I spread my investments across different areas: stocks, bonds, real estate, and even some small business projects. Why? Because when one part of the market goes down, others may go up or stay steady. For example, if tech stocks are falling but real estate is rising, I'm protected from big losses. This approach helped me sleep better at night, knowing my money wasn't all tied to one thing. Diversification gives you balance, stability, and more chances to win, even when the market is shaky. Think long-term, not short-term. If I had sold every time the market dipped, I'd never have become a millionaire. One of the hardest lessons I learned was to stop checking my portfolio every day and panicking at the smallest changes. Investing isn't about getting rich overnight. It's about letting your money grow over time. I bought strong companies and held on to them, even during market crashes. Staying calm and focused helped me avoid the emotional roller coaster that ruins many investors' chances. In the end, time in the market is more powerful than timing the market. Long-term thinking gave me the greatest rewards. Automate your investments. How do you make investing easier and more consistent? Automate it. One of the best things I did was set up automatic monthly contributions to my investment accounts. Every month, a fixed amount would go into my index funds and other investments without me lifting a finger. This helped me stick to my plan and avoid spending that money elsewhere. It also meant I was investing regularly, even when the market was down. This is called dollar-cost averaging. It allows you to buy more shares when prices are low, which can increase your returns in the long run. Automation made investing a habit, and habits create wealth. Reinvest your profits. What do you do when your investments start making money? Don't spend it, reinvest it. I made a rule early on. Every dividend, every interest payment, and every profit I made from investments went right back into the market. This is where compound growth comes in. Your money earns more money, and that new money also earns more. Over time, this snowball effect makes your portfolio grow much faster. Reinvesting might seem boring at first, but it's one of the most powerful tools for wealth building. It's how small portfolios become big ones. Take smart risks, not wild guesses. Should you play it safe or take risks? I believe in doing both, but carefully. While most of my portfolio was in steady long-term investments, I also took calculated risks on things like individual stocks and real estate. The key word is calculated. I didn't just throw money into whatever was trending. I studied the industry, looked at company earnings, and analyzed the risks and rewards. When I felt confident, I took the leap. Some of those risks paid off in a big way, and that's how I was able to multiply my wealth faster. But I always balance risk with stability. Learn from mistakes and keep going. Did I make mistakes? Definitely, everyone does. But I didn't let failure stop me. In fact, some of my biggest financial lessons came from losses. One time, I invested in a startup because it sounded exciting, even though I didn't fully understand the business. It failed and I lost money. But instead of giving up, I asked myself, what did I learn? Every mistake taught me how to invest smarter the next time. I learned when to walk away, how to spot red flags, and what really matters in an investment. Don't fear failure, use it to grow. Stick to your plan no matter what. Market crashes, bad news, hot new trends, these things can shake your confidence. But I learned to stay calm and trust my plan. When others were panicking, I reminded myself of my goals. I didn't pull my money out or chase new trends. I stayed disciplined and followed my strategy. This helped me avoid emotional decisions that often lead to big losses. By staying focused, I built a strong and stable portfolio that grew steadily over time. Ask for help when you need it. Do you need to do it all alone? Not at all. While I made many investment decisions myself, there were times I reached out for professional advice. When I started getting into real estate and larger investments, I talked to financial advisors. Their experience helped me avoid costly mistakes and take advantage of smart opportunities. There's no shame in asking for help. Sometimes an expert's advice is the difference between a smart move and a costly one. So what part of my story stood out to you the most? Was it starting small, staying consistent, or reinvesting everything? Let us know in the comments what investing strategy you're most excited to try. And if you've already started, share your journey with us. Don't forget to like, share, and subscribe for more real-life advice on building financial freedom. Thanks for watching. Stay motivated, stay focused, and let's build wealth together.